Hey, what's going on, folks? Hope you guys are doing great today. This video is going to be talking about the SM75, which is an index that was created by the small exchange, and it's an interesting product. So I'm going to talk to you guys about it in this video. I recently discovered it, so let's go. If you enjoy this, smash like on the video. Let's do it. So small stock 75, SM75 is not to be confused with the SM57 Shure microphone. This is good for miking guitar amplifiers. Don't get it mixed up. SM75 is a stock index. All right. So the small exchange created this index, and basically what it is, it's a portfolio of stocks. I'm on their website now, thesmallexchange.com/products/SM75. What we can do here is we can see the data associated with this contract, and more importantly, we can see what are the index's components and weights. So I have it on this monitor right here, but in case you wanted to do it, you click there, it's going to bring you to the same page. So now we're on indexit.dxfeed.com, which is an interesting website that has data about various different kinds of indices. So here we go. The small stock 75 index is comprised of equities from 5 sectors. These sectors include information technology, industrial, energy, financials, and materials. And now what we can see here, the following are the current components and shares as of June 15th, 2021. So I imagine it's updated regularly here, but what we can see by looking at this is that there is fractional share positions going on for each of these instruments, and they're organized by category. So let's look at information technology stocks. Some of them I can recognize here: Apple, Amazon, Google, Lyft, Microsoft, TTD. And again, just referring to the fact that a lot of these are fractional share positions. What I do want to point out about this is that this is a stock index, similar to the S&P 500 or the Nasdaq 100 or the Russell 2000 or the Dow 30. It's a stock index of its own that has been created by the small exchange. Now, what's interesting about this index in particular is the fact that it is quite diversified. So you can see that it's in 5 different sectors there. Now, if I go ahead and look at the S&P 500 companies by weight, what we can notice right away is that the majority of it is weighted in tech to start. Okay, so I just did some quick maths right here, and the top 6 holdings of the S&P 500 are 25% of the index's value. So I don't know about you, but that does seem a little bit biased. And then, if we go down a little bit, you're going to notice that there's other stocks here that are in the technology sector as well: Nvidia, Tesla, PayPal, etc. What we can determine here is that the S&P 500 has a very strong weighting in the technology sector. That being said, it is also balanced in the other sectors as well, like the healthcare and financial sectors. And that's why you guys often hear me talking about the correlation between the Russell 2000 and the S&Ps and whatnot. That's the S&P 500 companies by weight. Now, just really quickly here, I'm on slickcharts.com/ whatever the index is. And this is an interesting website I discovered here that shows the most recent updated weights of these indexes. If you look really quick here in the corner, index weights as of the 6th of July 2021. So that was yesterday. So this thing is updated pretty often. Let's look at the Nasdaq real quick. There we go. 11% Apple, 10% Microsoft, almost 9% Amazon. An index like small stock 75, again, it's going to be more diversified. So it's going to be more balanced in your overall sectors, meaning that if the Nasdaq is crashing, this is not going to be crashing. If the stock market is crashing, this probably will be crashing, but it might not be crashing as much as certain individual sectors. So these are things you got to be aware of when it comes to choosing your products that fit into your portfolio and whatnot. It looks to be quite diversified. So what we're going to do real quick is we're going to look at a couple of correlation charts here for this instrument. So look at this image right here. This would be an example of the small stock 75 being plotted against the Nasdaq 100. This would be the drop in March 2020, and you can see the recovery is just about the same as the Nasdaq and the S&P 500, but in the more recent months we've seen higher highs in the Nasdaq, and you can see that the SM75 has been in more of a trading range. Almost reminds me a little bit more of the Russell 2000, which has also been in a trading range. So what that tells us is that this is a more balanced index of stocks, and it is not being overly weighted in anything. For example, NAS is just tech. Let's see if we can find any other pictures. So this is a picture that comes from the small exchange themselves here. Let's read it. A new kind of stock market. Index allocation of top stock. So like I just showed you there, S&P 500, 5.6% Apple. Nasdaq at this moment was 11.8% Apple. Now it's about 10 or something like I just showed you there. And SM75, a more diversified index of stocks, the highest holding is 1.33%. So that's kind of what you're looking at here when it comes to the SM75. It tries to diversify itself over 5 different sectors here. Now, the reason why I think this is interesting is because I think it provides investors with a tool that allows them to diversify their portfolios a little more and potentially use it as a hedging device for overall stock market exposure risk. So for example, if you're long on stocks and you've been doing really well for the last few years, this instrument here might be a decent way to reduce some of your exposure to your risk assets in your portfolio. And again, it has a very small notional size. So for every one of these contracts you buy or sell, you're selling $7,800 worth of stocks. It's pretty scalable in that sense. And like I said, I think it could be a good tool for investors if they want to either gain long-term exposure to the overall stock market or hedge themselves against overall stock market risk. So now if we go down a little bit here, let's look at some of these specifications here. Initial margin by the exchange here is $754 for one of these, meaning that this is the amount of cash you have to put on a trade. And like we just finished saying, the dollar amount that you're moving is $7,800. That's how a futures contract works. You don't have to put up the whole amount of it. I'm sure you guys know that. So you just got to be aware of the trading hours, expiry dates. All small exchange contracts expire on the 3rd Friday of every month. All right, guys, so I'm going to give you a quick example of how to get this symbol into your watch list and how to trade it. What you do first is you need a platform or a brokerage that supports this symbol. If you want a quick reference, go to the small exchange website, then brokers, and you're going to be able to see the symbols for each broker. Back into this IB quote monitor, I'm going to show you how easy this is. So first I'm going to type in the symbol, which was 75 SME, enter. Now we have the product come up here, futures. Now you're going to see a bit of information here in the top right corner. That's the initial margin for this contract. You can see it's $1,900. And that doesn't line up with the initial margin I showed you, which is actually the margin that the exchange is requiring. I think this is mainly due to the fact that the product is still relatively new. What you're going to notice is that each broker has their own margin requirements, and normally they're going to be closer to the exchange margin. So product notional $7,800. Interactive Brokers requires you to put out just about $2,000. You're still only putting up about 20% of the contract's value, which is still good. All right, so we're going to load in the most recent continuous contract here. Once you've typed in the symbol, again, 75 SME, you're going to get it prompted up here. Bring up the continuous contract. So that way, when this contract expires, it's going to automatically get replaced with the next month contract. That's the advantage of using a continuous contract. So now that we have this contract here, you simply need to put in an order to buy or sell it. That's a futures contract. This morning, stocks are down quite a bit. Put in an order, buy. Set your quantity to whatever. I'll put in a buy order, and this is a demo account, by the way, so just showing you guys. Here you can see this morning the spread is quite wide, and I imagine because stocks are notably down this morning. However, when I've looked at this product, I never really saw the bid-ask spread this wide. So that's just something to note. I've got one more chart to show you guys. I did pull out the S&P 500 against the SM75 on an interactive brokers chart. You guys know I don't like interactive brokers charts, but this is the only platform I can chart it on right now. So what you can see here is that the S&P more recently has been outperforming the SM75 here. The SM75 did take a drop, and this drop right here lines up exactly with the drop in the Russell 2000. So that tells me that this SM75 here is more diversified in the overall stock market than the S&P or the Nasdaq. So I managed to get the Russell 2000 on here, and you can see that there was a bit of a correlation going on for quite a while. And this most recent drop here looks to be exactly correlated with the Russell 2000 small cap index. So if you enjoyed this video, don't forget to smash the like button if you found it educational. I'm really happy about that. And I'll catch you in the next one. Don't forget to leave your questions down below. Take care. Bye.